Hello everybody, welcome to my YouTube channel. It's your favorite stock trading uncle, Uncle Charters. If you're proud to be my niece or my nephew, definitely hit the like button. And if you want to join the family, definitely hit the subscribe button. Alright, let's get this started. We're going to start this off with my Discord, where I write the plan every morning. Woke up nice and early, 7:29 a.m. to get the plan together. Here was the plan. I had a bull case scenario and I had a bear case scenario. Gotta cover both sides just in case so we don't get taken by surprise. If SPY opens above the 200 DMA is daily moving average. It's just regular moving average based on the daily chart. If SPY opens above the 200 DMA, 447 to 448 zone is first support. With 451.5-ish, that's a 20-week moving average, and 453.5 to 454 as price targets. I'd be a lot more bullish if 454 clears, which would trigger more upside targets. That was my bull case scenario. My bear case scenario, if 200 DMA does fail as support, okay, it is then the first resistant level. 447.5-ish to 448, that's the resistant level. My downside targets are 445.3 to 444.5 zone. That's a 50% retracement level. I like to give it a zone. And then if that fails, 440 to 441. That's the 50-day moving average. Okay, guys? So, yeah, I just let the group know. Possibly a trappy day. Make sure you size down. Respect your stop loss. Be water, my friends. Anyways, so that was the plan. So we're looking at a 15-minute chart here, okay? This is the 9:30 candle. Right when it opened, off rip, right when it opened, you can see by that long wick, this green line right here, these two green lines, that's my resistance zone of 447.5 to 448. That zone is resistant based on the 200-day moving average. As you can see here, at the first open candle, tested that level as a resistant because it opened at 446.89, below resistance zone, below the 200-day moving average. Got rejected as a resistant level, right? And what do we always say? Play it level to level. Rejection from resistant came right down to our support zone, all right? As I mentioned in the plan on my Discord, 443.5 to 444.5 based on the 50% retracement level. And we spent quite a while bouncing from that zone, okay? It was not breaking through. We never lost the 444.5 level. So at this point, there was no reason to get bearish, because we get bearish when we lose a support. All right. So if you play it level by level from this resistance, you should have been out, took profit. All right. That's in theory. I don't know if you actually did. Okay. We never lost the critical support level. So what do we do at support? We don't get bearish at support. That's where we look to buy calls. That's where we look to go long. That's where we look for bullish opportunities. Yes, it did chop a bit, all right? This was a false breakout of the 445.3 level. Broke right back down, false breakout. Couldn't break above and just continue to chop in our support zone. Remember, support zone or support levels is not where you buy puts, all right? If you've been watching my video for a while now, you guys know why. Because support level is where we expect demand. It's where we expect some buying. Unless it breaks, right? Where we expect buying and demand pressure and it breaks through, the sell pressure broke through, that's bearish. That's why we get bearish. That's why we wait for loss of support. We didn't lose it. And as you can see, it bounced all the way up for this long wick right here. It bounced all the way up back to our resistance zone. 447.5 to 480 was our zone. It went as high as 448.5, but it never closed. Where do we enter puts? Where do we short? From resistant. All right? You see why we do that? Wow. Push right back down. Now check it out. Here's where it got a little tricky. Here's where it's very important to understand price action trading concepts, because the strategy is simple. You buy calls or go long at support, you buy puts or you go short at resistant, but it's not always that simple. For example, this candle right here, the 2 o'clock candle on the 15-minute chart, actually closed at 444.4. We lost the 444.5 level. So what do we do when we lose a support? That's right. We always wait and watch for the back test. We don't catch FOMO. I mean, you can catch FOMO. You can buy the breakdown, but the risk is a lot higher when you do that. So to lower your risk, you wait for the back test to give us the confirmation. Now, when you wait for the back test, you look for two things. After we lose a support level in the back test, if we see a strong rejection because we lost it as a support and it gets tested as resistant, right? The strategy is to short or buy puts from resistance. So when it back tests that level as a resistant and we see a strong rejection, that's confirmation of more downside or a sign or warning of more downside. And technically you entered it as a resistant. You still follow the strategy, you see? The second thing you watch out for is for a recapture, okay? It's when you lose a support level and then the next candle closes back above that support level. That's a false breakdown. False breakdowns are bullish, okay? It faked us to the downside, and as you can see, if you respect the levels, right? Because now that it's recaptured, 444.5 is then support again. And as you can see, it bounced, shot right up, and went right back to our resistance zone. False breakout right here. And then pushed right back down from resistance zone. Came right back down to 445.3 support before pushing back up towards the end of the day, only to get rejected. SPY had a pretty choppy day. If you was a scalper, definitely a great day. You can't just be a scalper and entering randomly. You know, you got to be surgical with this. You got to long as support, you know, short from resistant. Okay? That's the, you know, got to use the levels. Whether you was a scalper today or you played level to level, in theory, you should have had a profitable day. My nephew, the chartist, I'm sure you guys heard of him. Not too long ago, he added in the education section on my Discord. He created a trading process. The chartist is trading process. Want to buy a call or go long? You have to ask yourself, is it at support? No, you don't buy. Yes, you buy. Cut loss when support fails. Want to buy a put or go short? You ask yourself, is it at resistance? No, you don't buy. Yes, you buy. Cut loss when resistance fails. Pretty simple process. All right? But you know, market makers, they don't make it easy for us. They're going to mess with our emotions. All right? So that's the 15-minute chart recap of the day. Scalper's dream, scalper's paradise. As long as you respected the strategy, you stay true to your strategy. You know, I hoped at least it served you well. All right, now we're going to look at the daily chart. As you can see here, the triangle, the blue triangle right there, pretty much, well, it gapped out. It failed. We're not within the triangle now. Technically, this is a breakdown, right? Okay, I'm just moving these all. So technically, this is a breakdown, but it wasn't like a breakdown that we could have, you know, traded, because if it was in this and then we watched the breakdown, could have shorted. So instead, it just gapped down. That's technically a breakdown. Will we get the gap fill? Well, the gap fill right now is at 449.8. That's the low of this candle. All right, so the gap is not that big, guys. But if it does hit 449.8, it definitely fills the gap right there. Okay, let's see. 200-day moving average, we lost it. Very bearish. Okay, I was hoping we get a bounce off of it, but we didn't. Instead, we got below it and treated that level as resistant. Okay, bears are winning right now. All right, so as far as resistance go, 200-day moving average is the first resistance, currently at 447.9. I'll only be bullish on the SPY if we can clear that level, which puts 441.5 back in play. Not only is that the 50-week moving average, the 20-week moving average, that's also based on this triangle pattern. That's also where the back test level is. Okay, it broke down. So we see a back test, you know, back test and go. Okay, we lost that support level. We want to see a back test as a resistance. That's around 451.5. All right, so it's two reasons. Two reasons why that 451.5 level is so important, okay? If we clear that level, we get back into this triangle pattern, or you can just say we recaptured this blue trend line right here. That puts 453.5 back in play to the 454 zone. And above that, we can go and test the resistance of the triangle pattern, currently at 456.5. Breakout of that would put 460 in play. Above 460, I would be bullish. Okay, guys? But that's it. Those are the resistance levels, and that's what SPY needs to clear to be bullish. As of right now, support is at 445.3 to the 444.5 zone. Okay, around here. If that fails, this yellow zone that I got here, these two yellow lines, that's around where the 50-day moving averages, you see with that orange line right there, is actually around at 440.99 as of right now. So I'm giving it a zone, 440.5 to 441. All right, that is the next support zone that I'm watching for. If this level, 445.3 to 444.5, fails. Okay, guys? So just play it level to level. All right? You want to get bearish? Let a support be lost. Watch for the back test. You want to get bullish? Watch for bounces off support. Watch for breakouts of resistance. You know, same old concept every single day. All right? And look at the VIX. All right? Now, it did have a strong wick at the top there, okay? But don't get it twisted. The VIX bulls are winning because this closed at 22 today, 22.9 cents. That's definitely an update from yesterday, and it recaptured and cleared the 13-day moving average. That's the green line. So even though it got rejected from the 20-day moving average, which is the yellow line, and it failed to hold the 23.6 retracement level at 22.94, still an update. So for tomorrow, those are resistant levels. 22.94, 23.55, then 25.72. That's a 38.2 retracement level. Let's see if VIX can continue to take the stairways up. Okay, guys? But I do want to mention, be careful. All right? I'm not a big Elliott wave guy. Okay? But VIX is moving impulsively to the downside. And I don't know when the top is. If this is a wave 4 that we're in, as you can see what I'm doing right now. All right, I don't know where the top of this wave 4 is, but based on the rules, it should not test the low of wave 1. Low of wave 1 is at 28.84. All right, so remember those resistance levels. We're going to play it price action, level to level. Okay, that's number one indicator. But as of right now, this is what it's looking like. All right, a wave 1 is short, wave 2 right there. Then a long wave 3, correction up to wave 4 to give it a breather. And then we can head for one more downside for wave 5. All right. Doesn't guarantee that this is true. Okay. We still, just like I said, price action, level to level. Just watch the resistant levels. As of right now, VIX is looking bullish and is building a lot of bullish momentum. I would turn bearish on VIX when it loses a support level. Okay. Right now, it recaptured that 200-day moving average at 20.77. It recaptured the 13-day moving average at 20.94, and it's still above the 5-day moving average at 20.38. Okay, remember those levels? Or you can check it for yourself. VIX daily chart, 5-day, 13-day, 200-day moving average. Check it. Okay, guys? Triple Q also broke out, gap down from the triangle pattern. All right, tested a very critical level. 352.64 was a 38.2 retracement level. We bounced below that a little bit. You know, we washed below it, but ultimately found some buying pressure and managed to close above. All right, so that support level is well tested. We'll see how strong it is. You know, it doesn't seem as strong right now. Well tested, but we'll see what happens. As long as that level holds, okay? That level, 352.64. Upside targets are still in play, okay? The next resistance is around 360, all right? Above that, 363.5 is in play. Then maybe another shot at the 200-day moving average up at 369. But if we lose 362.4, that puts the 50-day moving average back in play, all right? It's not 362, excuse me. If we lose 352.64, 349 is the next downside target based on the 50-day moving average. If that fails, a nice big drop down to 339.3. Okay? Dow Jones lost the 50% retracement level at 346. Today, it treated that level as a resistance. We found strong selling pressure there. So only way for me to be bulls on Dow Jones is if it's back above 346. As long as below 346, 343.7 is in play. That's a 50-day moving average. Then below that, 340.6. All right, 340.6 fail, I will turn to bearish. So if we get down to this level, bulls need to step up. All right, at that level, must hold. IWM. Today, it back tested this white trend line, okay? This white trend line from November high to January high. Recently broke out of it back in mid-March. Today, back tested and found some buying pressure, okay? So for me to be bullish on IWM, it needs to get back above 201.43 resistant level. That's the 23.6 retracement level. And then the 20-day moving average is at 203.87. That will be a resistant level as well. Then above that, let me see, above that, any more moving averages? Above that, yeah, this is the 13-day at 206. And then if we can clear 206, 209.7 would be in play. All right, let me move the moving average. So I also got IWM in this triangle pattern, the yellow triangle pattern. All right, tomorrow, the critical support will be around 197.2. That's the support of this yellow triangle pattern, okay? Definitely got to hold 197.2. If that fails, that's a breakdown of the triangle pattern. We're going to possibly see new lows, probably lower than 188. But if it holds, and it needs to recapture 201.43 to see more upside. And let's see, Apple lost the 13-day moving average, treated it like resistant today. All right, so that first resistance at 173.83. Managed to find some support around the 170-ish level. All right, that connects to March 24th's low as well as February 18th's high. Okay, so that 170 level, it does have some support there. But if that fails, 20-day moving average is in play. That's at 168 currently, and below that is a test of this bull flag. Okay, where we broke out, finally get a back test of the breakout level. All right, that's at 167.2. All right, absolutely critical level to hold. If that level fails, false breakout mode. Okay, guys. But if 170 holds, 173.83 is in play, then back to 176 to 177 possibly. Okay, and obviously if that fails, we'll check out that breakout level on the back test. Tesla, well, yesterday it lost the 5-day moving average. Today it lost the 13-day moving average. 13-day moving average is currently at 1,051.45. That's the first resistant level with 1,036.4 as a critical support level. That's based on the 61.8 retracement level of my Fibonacci levels. Below that, obviously, we lose a support. We get bearish. All right. But keep in mind, the next support for Tesla isn't until 972. So if 1,036.4 fails, that's a humongous drop. Okay. That's what happens when Tesla decides to move up so fast. That sometimes when it drops, it moves just as fast or maybe even faster. All right. So those are the support levels I'm watching. Below 972, very bearish. 909 back in play. Below 909, we'll drop back into the 800s. Possibly 828 will be the support. All right. So 1,036.4 needs to hold. Needs to clear 1,051.45. Clear that 13-day moving average. Got the 5-day moving average at 1,088.9. Need to clear that to put 1128 back in play. And Bitcoin looking pathetic. Broke down from this pink triangle pattern and also coming back within this bigger yellow triangle pattern. Just looking bearish. I don't even want to cover it no more. But hey, if you guys like it, I'll continue to cover it. But I'm telling you, it's pretty much in false breakout mode at this point. All right, it's looking pretty strong. It looks like it's going to close back within this triangle pattern. There's support at 41.7K. Below that, we'll put 36.5K. And below that will be a breakdown of this yellow triangle pattern, okay? For me to be bullish, it needs to stay above 44.1K, get back above 45.6K to put 48K back in play. All right, guys? So that's what I have for you guys today. Thank you so much, nieces and nephew. Thank you for accepting me in your family and letting me be your uncle. And talk to you all soon.